开始了。
Hi everyone, and welcome to our live stream today. Thank you for joining us. I'm Vian from Tiger Brokers, and I'll be your host for today's session. Today we are taking a deep dive into the state of global technology landscape, AI infrastructure monetization, and key macroeconomic drivers in our session, 2026 Q2 earnings review, big tech, AI CapEx, and why tech stocks pulled back. We are honored to have a premier market expert joining us today. She is the founder of Han Insights and a former Cboe economist, bringing extensive global macroeconomic and market research expertise to the table. So let us all welcome Selina Han to briefly introduce herself and share the key focus of her presentation today. Welcome, Selina.
Hi, everyone. I'm honored to be here for my second time. Last time I covered about SPX 0DTE options and event, and this time it kind of relevant. I want to summarize what's going on in July, late July till now. There's many market movement, and there's also a very interesting story here. By the way, just there's a few new products from Han Insights. I will use it for this presentation. Thank you.
Okay, thank you so much again, Selena, for the introduction. I'm sure everyone is very eager to learn more about what you have to share for today. And now moving on to the next slide. For those joining us for the first time, welcome. So here's a quick introduction. Tiger Brokers is a leading global online brokerage firm. And beyond just trading, our Tiger community provides a wealth of expert commentary on market trends, industry news, and high conviction investment opportunities to help you stay ahead of the curve. And now moving on, for viewers who are interested in exploring investment opportunities further, you may also download the Tiger platform, open an account, and fund it to access a wider range of investment products. As you can see here in the next slide, our flagship trading app, Tiger Trade, has over 20 million users with more than 2 million active investors across many countries. It empowers you to trade a wide range of securities in the US, Asia, and Australia. And that's not all. We also have powerful tools to enhance our investing experience. We have very handy tools like Tiger AI, Boss Card, and the Cash Boost account. With Tiger AI, you can analyze market data and generate insights in real time. And with the Cash Boost account, you can get at least 20,000 Sing dollars to enlarge your equity and ETFs buying power. So if you're ready to take the next step, check out Tiger today. You can also open an account and deposit using Selina Han's referral code to unlock exclusive USD cash vouchers via her Tiger Prestige account. And now in the next slide, here's the fun part. Today we have a lucky draw along with three quizzes lined up, each time with two winners, where you can walk away with exclusive Tiger merch. And on top of that, if you stay for 10 minutes, you can grab 25 coins. Keep watching until 20 minutes for an extra 25 coins and hit 30 minutes to collect another 25 Tiger coins. So stick around, stay active in the chat, and enjoy the session. Now, without wasting any time, let's move straight into our first lucky draw round. So here's the question. Which AI sectors are you interested in? A, big tech or cloud platforms. B, AI infrastructure like chips, memory, or power. C, consumer devices and ecosystems. D, advertising and AI-driven media. Or E, private AI companies. So keep in mind that this is an open question and there is no specific correct answers. Okay, thank you all for your answers, for your sharing, and our team will be selecting two winners from each question to receive exclusive Tiger merch. Now, to the next slide, before we dive into the discussion, a quick but important reminder. This broadcast has not been reviewed by the MAS. The views expressed are the speaker's own and not Tiger Brokers. Today's session is strictly for educational purposes and is not financial advice. Investing involves high risk, and past performance does not guarantee future results. And all right, moving on to the next slide, it's time for us to head back into our main focus today. So the floor is yours, Selina. Welcome.
Hi, thank you. So I wish I can also get lucky draw next time. And so I'm the founder of Hunt Insights. And like also I did some research for Cboe Global Markets before I was the first economist there, specialized in US equity markets, listed options, market structure, exchange economics, and financial regulations. So today I would like to talk about what moved the market in late July and early August. So I'm going to cover earnings, Fed Reserve, AI cap expenditures. That's a very hot keyword. And also market positioning. And there is a very interesting market event I'm going to talk about in later of this live streaming. So here is the basic information about Hunt Insights. If you're interested, you can check our website. Today's agenda is what happened and why did it happen. So, if you watched our live streaming last time, I always want to talk about why it happened. What is the fundamental? What is the theory? How are we going to use it for future investment decision? And what comes next? So we need to watch something. There are a lot of things happened. So, and I'm very excited to share all my findings and opinions on all those events. The up part of this chart shows all the macroeconomics events. FOMC decision mentioned last time. A lot of people trade around FOMC meetings using SPX 0DTE options, as well as job market reports or CPI reports, because those two things are the things FOMC or Fed need to make decisions for interest rate. The great thing is actually before the FOMC meeting, there's rumors. A lot of people think Fed is going to increase interest rate. Even my very good economist friend called me like, they're going to increase interest rates. So you need to do something. So I didn't do. End up the rates held steady. It's great. Then the next macroeconomic event was payroll. So it's stronger than expected. So which means we need to understand what those means, right? So the payrolls was very good. The job market is good. So that there's less urgency for rate cuts. So my support the rumor about Fed is going to increase interest rate or not. But the CPI actually shows inflation continue to cooling. So last time I mentioned, if the inflation is high, then the Fed is going to raise interest rates rather than reduce interest rate. But these actually supports easing expectations. And yesterday US, so it's the US time yesterday, FOMC minutes highlighted caution on inflation, markets price fewer cuts. We will see later. In July, there will be a FOMC meeting. And late August, there's also a very important market event, which is the Jackson Hole Symposium. Before the chairman was Jay Powell. Now we have Kevin Walsh, the new chair. So we would like to see what he's told in that presentation, and he will give some September guidance for the FOMC meeting. People everyone tigers, we should pay attention to this if you're very active in the market. That besides all these macroeconomics events, actually all those big tech companies release their earnings, Q2 earnings. In the late July. First was Google, and 2 days later, which was very important, they did AI CapEx guidance. So raised up to $85 billion. And the second one was Microsoft. They also reaffirmed AI CapEx plans. The third one is Amazon. and then Meta and Apple. So I will discuss one by one to see how we should interpret their earnings reports and what their strengths, what we are looking for, how their AI cap expenditure look like. And if you look at the chart or if you follow the market, you might raise a big question. Why did tech stock fall despite strong earnings, right? So their earnings are pretty good. But in late July, actually all the tech stocks went down a lot, and including the AI stocks. What happened? I also try to understand. I got a lot of questions from my followers, my friends, so later we kind of review what happened. Here I would like to explain some of the contributors. So first look at their earnings report. I kind of describe their earnings report, also use a sentiment analysis to generate this chart. Alphabet is very interesting. You can think it's for AI, for their AI, it's both offense and defense. Alphabet investment case raised on three time horizons, not one AI story, but three moving at different speeds. So the fast speed was the current one, is the search engine. We all know Alphabet is Google, right? So Google's search engine is very famous and generating cash flow for them. The second one, a little bit smaller, lower speed, was the Google Cloud, but still very promising. We see strong growth from Google Cloud. It's benefit from AI because there's a lot of AI demand and the users use Google Cloud for AI infrastructures. The, the third one, a little bit slower growth from the Gemini. Gemini is one of the popular AI tools, like uh, besides OpenAI's ChatGPT, right, and Anthropic Cloud Code. So we don't know how much the revenue will come from that part, and there's a huge competition among all those tools. So we should watch for that. Mm, so we do see AI cap expenditure. So they gave the guidance 2 days after earnings announcement. And that was very important. You see a lot of newspapers kept using AI cap expenditures in their headlines. So the question is, they spend a lot of money on AI cap expenditures. Are they going to monetize it? Have they already monetized it? For Google, it's in the early stage. Investors watch whether AI revenue justify the speed. So it's still in the early stage. And I will talk about other companies later. They're at totally different stories. Even their stock price are kind of correlated to each other recently. And here is a very interesting chart I made. So I try to, there's a few usage of those kind of charts. First, I showed the allocation of Alphabet AI investment. You can see they invest mostly on data centers, and then GPU. The next one was cloud infrastructure, networking, power and cooling Gemini AI search, right? Data centers is about 25%, GPU is about 20%. And there's another way to use it. A lot of investors read their earnings reports or their statements, public statements, not just for predicting Google's growth stock performance, but also invest in those supplier of data centers, GPU, which is like chip makers, cloud infrastructures, and networking companies. So we observe those companies who are in those related industries already, their stocks has been elevated. Um, that's why we should also study those big techs, stock reports, earnings reports, and public statement for others' investment decisions. Here is the High Insights investment framework. So for AI cap expenditure, it's not just like other operating expenses. Other operating expenses, usually if they go up, the stock price will go down because we think their revenue will go down. But AI cap expenditure, it's two-sided. Spending a lot might generate a lot of future growth, but we don't know whether it will translate to the revenue growth. So investors of those companies should watch closely how they performed and how they make the decisions for next AI investment expansion. So that's the framework. We would like to see revenue growth in the next earnings report, see how that affects cash flow, which benefits shareholders' value. Here is something exciting. I mentioned High Insights made something new for you guys, which is the AI CapEx scoreboard. So we analyzed using the sentiment analysis, analyze the report. So usually are the words, also their public statements during their earnings report to rate the categories. So it's very easy for you to see how are they doing. But the categories for each companies are different. For example, first, how we measure. So the green, we use the green lights. We use the traffic lights. The green light means strong and improving. Yellow means mixed watch. Red means weak and deteriorating. For Alphabet, the categories are AI investment, overall AI investment, Google Cloud, Gemini adoption, search, AI, AI monetization, margins, ROI, and market reaction. So those parts I also use for other stocks you will see later. Here, it's very strong. AI investment strong, as I mentioned earlier, they announced 80 something billion, 80 amount 80 billion dollars on AI cap expenditure. So that's a lot, very aggressive. And the Google Cloud doing very well because of the demand from AI infrastructure, AI tools. Gemini adoption is getting better. Usage and production integration continue to expand. So it's still very competitive, but I can hear some of my friends are using Gemini instead of GPT or Cloud, or they use all of them. For search and AI, we need to watch which is the core business. It remains strong, but there's a concern. A lot of people might use, if you have app, GPT app or any, there's other app like DeepSeek or whatever. They think they can replace the usage of search engine. So that's a concern. But so far, so good. We need to watch. For AI monetization, it's improving. Revenue contribution is developing, but still needs to catch up with investment. So we need to watch it as well. For margins, not sure. Market reaction is weak. Actually, the stock performance didn't go well. No, even the fundamental is very strong. So the question for Google is, can Gemini create new revenue stream beyond search? Because as I mentioned, search could be, there's already some challenge from AI. So far, it's doing well. But we care about future. Stock price is reflecting future growth. So Gemini is the key. Here is a very interesting 3-month performance. Stock price I showed here. I tried to plot the events on the stock chart. So the earnings release I mentioned there, it's very strong. And we see before earnings announcement, the stock price were already going up. It's very strong, and they kept the momentum even after until they had AI expenditure updates, and it peaked and went down. But later you will see I actually did study about all those big tech stocks. It shows some similar movement, and it could be because related to their timing of earnings announcement, AI cap expenditure, but also could be something differently, and which is the situational awareness event. I will discuss that later. So the 3 months performance for Alphabet at 13%, quite impressive. Here I highlight there's Han Insights takeaway on this area. So the first takeaway is AI leadership. Alphabet continues to lead in AI, cross search, Gemini, and infrastructure. Aggressive AI investment, we need to watch monetization. Okay, the next one, Microsoft. And it's very interesting for Microsoft. I think most of you probably used the Microsoft software for work. Same for me. So it's naturally for Microsoft to like they have the natural or historical advantage for enterprise because the enterprise already using Microsoft softwares like 365, So they implement Copilot and Azure for enterprise users. And if you use Microsoft 365 at work, you probably already noticed the AI intelligence already adopted in your chat. Like if you use Teams for communication, if you write emails in Outlook, usually they can complete a sentence. It happened with me. It's very useful and it's getting more and more intelligent. I found it's really, really needs what I am like read it what I want to read. So not just trying to use frequent phrase. Before it might be frequent phrase like see you later. So if you type see you, it will be later or something. No, now is if I did analysis at the both, and now later I want to summarize, it knows I'm going to summarize it. I feel like it reads my mind. So definitely already see monetization from AI. Microsoft's story is very different from others. But so we already see their monetization. The concern is there faster growth in the future? How are they going to keep growing their AI revenue? They actually keep expanding a lot on AI cap expenditure. So if they spend so much money, are we going to see faster enough uh, growth or revenue margin to justify continued infrastructure spending? That's what we need to watch later. Here, I also introduced our AI investment dashboard. That's the AI scoreboard I used before for Google. Here, I changed the category a little bit because that's for tailored for their business, for their investment. And you see a lot of green lights here. So they're doing pretty well and very confident. The investor should be very confident about their AI investment. As I mentioned, because the AI infrastructure, no, the enterprise strength, right? The enterprise, most of the enterprise are using their softwares. For Azure, very strong AI driving cloud demand. So they have their cloud as well, like Google. Copilot, also very competitive AI tool like ChatGPT and Gemini and Cloud Code. Enterprise AI, very strong. AI monetization, very strong. Maybe the strongest among all the big tech companies. For ROI, we need to watch it because AI CapEx has been elevating. So we need to see how are they going to generate more revenue to justify that. Market reaction is mixed. So here I already covered that. Let's look at their 3 month performance. Why it's mixed? If you remember what I showed for Google, right, Alphabet, actually the pattern looks similar. It's just a little bit because the earnings announcement is just a couple of days after Google. But it's still very strong earnings announcement. And before that, market are already very positive towards their earnings. And it kept momentum until they announced continued AI infrastructure investment. And then the stock price went down a lot until August, hit the bottom on August 7th. Could be the timing of their AI infrastructure. Consumer investors are worried about how are they going to translate into revenue or something like different. Maybe another market event related to that. The 3 months performance similar to Alphabet, a little bit higher, about 14%. Also, Azure leadership, Copilot momentum, where we need to watch a Copilot momentum. If most of the company, if they adopt Copilot, they probably already adopt. So we will see the recurring revenue opportunities. And we also need to watch balancing growth and returns since they spend a lot of money on AI cap expenditure. We would like to see, we are curious about how they're going to grow in the future. Okay, quiz one.
Okay, so now it's time for our quiz. So let's see who's been paying the closest attention. So here's question one. According to the presentation, what is driving Microsoft's clearest path from AI investment to monetization? A, Azure and Copilot enterprise adoption. B, custom silicon like Trainium or Inferentia. C, advertising revenue growth. Or D, on-device AI processing. Okay, I see a lot of comments flooding into the chat. So let's show the correct answer. The correct answer is A, Azure and Copilot enterprise adoption. So huge congrats to our winners and moving back to Selina.
And I saw a lot of questions already. We will have the Q&A session later, and I'm excited to answer those questions. Thank you for the comments about my beautiful slide. Yeah, I did spend some time on that. Um, Now let's talk about Meta. Even those five big tech people always relate them together, but their AI strategies are totally different and their stories are very different. So even it looks like I'm showing similar charts, tables, but the stories are totally different if you pay attention and do pay attention so you can win the quiz later. So Meta AI is working, but it is very expensive. And we know a Meta, the Facebook, right? As their core business is advertising. They have advertising on Facebook. They have advertising on Instagram. The revenue are doing very well here. And actually, they benefit a lot from their AI technologies. Here, I showed the Meta wheel, the flywheel here. Why is that? So actually implementing the AI can help their recommendation and ranking system working better. So they send better recommendations to the users. When you're opening your Instagram, you will see some ads pop up, right? And they know your preference better because the AI is improving. Then you might see it's very relevant or very interested, and you're gonna click the ads. The same as other platforms under AI, under Facebook, Meta. So that increase better, higher engagement on Meta apps longer, right? And that means they will receive more higher volume from their customers, the commercials. So the manufacturers found there's a lot of engagement, a lot of feedback, a lot of clicks. They sound longer, there are more reactions, a lot of people answer questions or purchase something, right? And that attracts more and more companies put ads on Meta's apps. So then Meta can price that better. So this really generates higher revenue for Q2. So year to year is about like between 25% to 28%, which is $60 billion. And look at advertising revenue, which is also about 60 billion. Ad impressions went up 14%. Impressive, actually. But there's another side. They did spend a lot of money on AI cap expenditures. You see here, for Q2, they spent $31 billion. Yeah, they do benefit from AI, but they did spend a lot. Uh, and they are keep spending more. AI cap expenditure, they have the guidance. They're spending much more. They just gave the guidance for the fiscal year 2026. They're going to spend about 130 to 145 billion dollars for AI cap expenditure, which actually is not good for their free cash flow. Compressed, now the free cash flow is less than $8 million because it's compressed by AI CapEx. Raise the same question like others, the first two companies. Because if you spend so much money, will these translate to more revenue? And their revenue is advertising. For if you know something a little bit about economics, there are some scale of economic return, scale of return, whether there's more margin for them to achieve more revenue growth by spending more, we don't know. So we should pay attention to their next quarters, or if you are interested, you can always study their Meta's apps, Instagram or Facebook, how they're doing. Here, I'm going to show you the investment dashboard we did for all the companies as well. Still very strong. You see there's 5 green lights here. So overall AI investment very strong, which measures how much they spend on AI infrastructure. They did spend a lot, I just mentioned, and the guidance is they're gonna spend about $140 billion this year. For AI advertising, very strong. The AI did improve Meta's core revenue engine. If you use their software apps, you probably had a better experience. You notice the pop-ups, everything recommendations are way better. So you might like it better. For me, I barely use Facebook or Instagram, but a lot of people use it. But still, recently, I feel like I like it better because there are more recommendations. And for marketplace, if you use Facebook, the marketplace on Facebook are very popular. They nowadays they pop up something based on my search or something very relevant, very helpful. And AI products, AI increasing embedded across Meta's ecosystem. That's very important for their ecosystem since they have multiple softwares for social media communications. AI did improve their experience. About AI monetization, we already see their revenue went up a lot, and which was directly affected by their AI investment. For margins, watch just like other companies, CapEx risk elevated. Hey, they did spend a lot of money here, way higher than others. So this kind of hit their stock prices, and we really need to watch closely if you are the investor of Meta. But another thing, if you want to see what they invested, I mean, the data center, all the other things, the categories, you can read their reports and find whether you want to purchase the stocks, the data center stocks or AI infrastructure stocks accordingly. So their biggest strength is AI is improving an already enormous advertising business. I think a couple years ago, Facebook stock price went down a lot because the news was about the economy was not really good. Their advertising revenue was going down. That's why their stock price are quite volatile compared to other big tech companies. Heavily rely on the advertising business, but the advertising business are not always very stable. It's based on the overall economy, how many people are going to buy, whether the manufacturers have money to do advertisement or related. And the next about what is their biggest opportunity? AI can improve both sides of Meta's platform, engagement, and AI performance. So that's really great, very great for Meta. The biggest risk I have been keep mentioning that again and again. Their CapEx is really, really high this year. Okay, here is the chart. I think everyone likes the 3 months charts very well. It shows the time when they announced their earnings and when they provided their AI CapEx guidance. See the same day, July 29th. And I mentioned their stock performance, their stock chart is always very different from other big tech companies, very volatile. We didn't see a stable upward trend here for this 3 months performance. It's very different. So even their earnings was very strong, but it went down. Post earnings reaction was quite bad. It went down by 8% before the end of July. Investor focus on EPS, CapEx, and free cash flow. So investors are not very happy with their financial statement. So they underperformed. The 3 months performance was negative 11%. Here I mentioned about the AI advertising, massive AI investment, engagement engine. I feel like if you pay attention about what I just discussed, the AI benefit their advertising business, all those are very strong. But the stock performance didn't reflect what the fundamentals. So we can figure out whether there's alpha in Meta. Okay, there's next another a chance for you to win the award, the prize. Lucky draw, quiz 2.
Okay, that was really quick, but it's time for our second quiz. And you guys are doing great so far, so keep the comments coming. On the screen, you can see the next question. So, what is Meta's fiscal year 2026 CapEx guidance range mentioned in the presentation by Selina multiple times? A, 85 to 100 billion, B, 130 to 145, C, 60 to 75, or D, 150 to 165 billion. Okay, I see a lot of comments coming in, and some people are saying A, some people are saying B. There's even people saying D. So we will show the correct answer now. And the correct answer is actually B, 130 to 145 billion. So a huge congrats to our winners. We have one final lucky draw left at the end of the session, so please stay tuned. Now back to Selena.
Thank you. I saw a lot of questions as well about Facebook. It's very interesting. We have many intelligent participants here. I would like to discuss that at the Q&A session. Here's Amazon. Oh, Amazon's story is another different story. It's very different from the others as well because you see, I have this chart here. So they are the AI infrastructure provider. They're also the user of AI, and they do not provide any AI tool like GPT, Gemini, or Cloud Code, right? So they are not competing with, they don't care who is going to win, whether Gemini is gonna win or ChatGPT gonna win. They don't care about that. They benefit from the usage of AI because a lot of people are using, if they're using AI models, a lot of people or a lot of companies are choosing AWS as their cloud for running their AI models. Um, so they remains Amazon's primary profit engine. Um, Also, the another side for about the AWS is they have the custom silicon cuts resilience on third-party chips. Also, enterprise AI workloads increasing drive cloud demand. So all these are the seller part of the AI is great. Sure helps their revenue growth. The other side for their retail, logistic, services and Alexa, which is their smart home system, right? The AI-driven demand forecasting and inventory placement are very helpful for this sector as a user of AI, and automation improving fulfillment center efficiency, and Alexa being rebuilt around generate, generative AI. Generative AI is like GPT and Gemini, a consumer AI service beyond the cloud. So if you use, if you're using it, if you're using it, you will see there you see Safari as what is the Siri, right? You use Apple, you see Siri. If you're using Google, that's the Google Assistant. If you're using Amazon's the little ones, their smart home is called Alexa. They have been improving their models. Even they do not create GPT or Gemini. They're benefiting from that. I don't know. I haven't did any research about how the user's experience on Alexa is that getting improved. Personally, I'm using Siri. Sounds like they're making some improvement. So anyway, they still have a lot of room to improve their Alexa and the retail logistic by using AI models. They don't need to compete with other companies. So they benefit from AI adoption. My takeaway is Amazon does not need to predict which AI application ultimately wins, as I just mentioned. If enterprise AI usage grows, AWS can monetize the underlying compute models and infrastructure. And another thing I noticed, there's more and more AI actually help more and more people to have their own startups. It could be a one-man company. There are more and more one-man company now because you can use AI to manage your small startup. So you don't need to hire a lot of people. People even can have their part-time. They have a full-time job, but they might do something business part-time and using AI. And a lot of time they will choose AWS as their AI infrastructure. So mm, I saw some people might think it might price in, but there's still a lot of growth as there more and more people are going to use AI to build their business or other user cases or enterprise are going to switch to AWS. Still a lot of potential. Let's look at Amazon's AI investment dashboard. Um, there's fewer there's fewer green lights here, four green lights here. The AI investment is very strong because they continued AI infrastructure expansion and their AWS infrastructure seller. They are the infrastructure seller, right? They do not invest or buy AI infrastructure. They have their own infrastructure. It's very strong. They spend their money to build their infrastructure. So there is hardware facility to support that. Enterprise cloud AI demand remains very healthy. Custom silicon improving. Retail logistic very strong, as I mentioned earlier. Alexa consumer AI is still on the early stage. I haven't heard people are saying the Alexa experience is getting improved a lot. So you will see there more improvement going. Let's watch it. Margins, we need to watch it. Market reaction is also mixed. Um, Here I would like to show you the 3 months performance here. Now you see Amazon stock performance. This chart looks pretty similar to Alphabet, to Microsoft, but Meta is very different from these three companies' stock performance. You see they have stable upward trend in these 3 months. Before earnings announcement, the stock already climbed slowly, but Amazon, their stock price always like that, quite stable. They don't go up a lot. That's very normal. And among the 3 months, 12% growth is already pretty impressive for Amazon. They did AI infrastructure AWS investment update on August 5th, and then it went down. So I feel like even the announcement days of their AI infrastructures are a little bit different. The momentum or the pattern are very similar. Earnings strong, keep going, but once they mention about they are going to expand, they're going to spend much more on AI CapEx, then the stock price will go down. Because AI CapEx really compress the cash flow. Cash flow is something investors should pay attention. It affects their future growth. Whether they can grow healthily depends heavily on the return from their investment. So it's very uncertain. The market reaction is very similar to other stocks, the four stocks I mentioned. The market has concerns about their expansion on AI expenditure. Yeah, so there's investment debate. Investors are evaluating whether AI revenue growth can eventually outpace rising capital expenditure and support margin expansion. If you are very active on social media, you see a lot of retail investors are discussing about that. So it's a debate. We don't know yet. We need to watch for their next quarter slides. Okay, let's go to Apple. Apple is so different. Even I always repeat myself, everyone has a different story, but Apple is so different. Why is that? And actually didn't invest a lot in AI CapEx. So you see the chart here is very different from the others. I don't show AI CapEx or whatever. They are very conservative on that. Look at that. their peers, big tech peers, spend among between $85 billion to $145 billion, which is Facebook, right? Maybe why Facebook stock price didn't look very well because they are the ones spend the most of money on that. And look at Apple, very small compared to their big peers. And they didn't have any cloud service like Amazon or Google, or they're not doing their own AI tool like Gemini. And what they implement their AI improvement is actually in their hardware ecosystem. We all know Apple's strength is from their hardware ecosystem. They have their cell phone, computer, and tablet and other devices. The AI did implement in there. So AI increased hardware value, deepens ecosystem lock-in on device processing remains a privacy first differentiator. If you like Apple, you know Apple very well. Their devices are very famous for privacy first rule. So they always encrypt the data for their users, and they use AI for more efficient understanding users' experience, but as well as keep it private. And hardware, they're also the chip makers, right? They have their own chip. So this area is very different from other big tech companies. For the service, they have Siri, I just mentioned when I compared to Alexa. Siri, they try to implement AI, kind of invested in Siri and trying to make it more intelligent, but have mixed feedback, I feel like. I make my iPhone talking to me because I'm calling its name. Service revenue stays resilient. Apple service is really well. And AI is expected to strengthen long-term engagement rather than open a new revenue line. As I mentioned, all the others or earlier I showed AI CapEx expenditure is different from operating expenditure. Operating expenditure could be just a bad increasing operating expenditure could be just a bad signal, but AI CapEx expenditure sends two different mixed signal. It could be a great opportunity for future growth, but Apple is very conservative on this area. We don't know how are they going to bring more revenue by not spending a lot of AI CapEx expenditure here. And normally we see generally they're just using AI in their hardware ecosystem and improving their service. So the service is just for more engagement, loyal customers, or attract new users. And I also create an investment dashboard. Even they didn't do a lot of AI investment so far. Maybe they're secretly doing something. They're always doing something secretly they didn't announce yet. But just based on what they announced here, the AI investment is moderate, right? Compared to the others, we don't even have numbers. I didn't even show the numbers how much they spend on AI CapEx expenditure because it's very minimal. For Apple Intelligence, improving rollout continue across devices. Their assistant, the Siri, is getting better. And also, if you upgrade your iOS or Mac OS system, you did experience AI Apple Intelligence in your experience. Hardware ecosystem very strong. AI enhanced the Apple ecosystem. I'm not an expert in the hardware session. I'm just a user. So from my perspective, it's more about the software experience getting better. Hardware probably can make the hardware cheaper, just using very low specific hardware and provide very good service. Service is very strong. AI monetization at the early stage, they didn't invest a lot in AI. So very early, we don't know what will happen for the new revenue growth. For margin, it's always very strong. So you see other stocks are going down in late July or July, but Apple stock went up a lot. Why is that? Because the concern, as I mentioned, more AI cap expenditure will compress the cash flow. But Apple is always famous for their great management on cash flow. And that's why when their stock price went down, their management team always can buy back their stocks because they have a lot of cash in their financial statement. And the market reaction is mixed. and I will show you what's going on, what happened with them. Okay, hey, we see a similar pattern like the other three stocks, different from Meta. So the stock price keep going up before earnings announcement, which is on July 30th, and Apple announced Apple Intelligence expansion. You can think as also something like AI cap expenditure, but it's not really the way the other big tech companies did. So Apple announced broader Apple Intelligence rollout across more countries, new features for Siri, and on-device AI updates. All this usually make engagement better, so users will stay with Apple's products or upgrade to new generations, something like that. But the 3 months performance didn't beat other three uh, peers, right? The other was 13% or 12%. This is just 4%. And when they announced Apple Intelligence expansion, stock price went down. Um, the reaction based on our sentiment analysis, it looks like shares pull back as investors wait slower AI monetization visibility compared to peers and uncertainty around upgrades cycle acceleration. As I mentioned, yes, it's good for their cash flow. They didn't spend a lot of money on AI CapEx, but where's the future growth? So it's always like a trade-off. You want to spend on a lot on AI cap expenditure, so you can have future growth. But if you spend too much, can you translate the expense to revenue? We don't know. So if you don't spend a lot, where is the future growth? Uh, we need to watch that for Apple. They might announce something later. And we know if you are Apple fans, Apple usually announce new products in September. Let's see what they're gonna announce later. Here, since I did the AI investment scoreboard for all the five companies, so you might already forget what the rates, the traffic lights look like for each of them. So I put all this together. Even if you remember, I put different categories for each companies, like based on what cloud service they're using or what AI investment they did. But here I change a little bit, so those categories are being used by all the five companies, so you can compare them equally, apple to apple. So for AI infrastructure, okay, just first look at the chart. You see Alphabet have a lot of green lights. Microsoft, Amazon also have a lot of green lights. So they did well in AI investment. Meta kind of more mixed. Apple or moderate, yellow. Most are yellow lights. So what are the categories? What are the indicators we created? AI infrastructure investment, I talk about, those are based on the numbers. They spend a lot of money. These four companies spend a lot of money on AI infrastructure. Apple, very minimal. CapEx growth commitment, very high. Meta, maybe too high. That's why their stock price are very volatile. Apple, very moderate. Priority, uh, proprietary AI models, Gemini, Copilot, Amazon have Bedrock, Meta has Meta AI, Apple has Apple Intelligence. Um, Pretty well for all those five companies. AI product adoption, doing very well, but sounds like Apple is behind. They might have their own agenda for AI monetization. Very strong, except Apple is still behind. For business AI benefit, same situation. Overall, AI momentum, very strong for the four companies. Apple is still developing. That's why probably, in the past 3 months, there's all about AI, AI, AI. If you spend a lot of money on AI, then the investor are really excited and they think their future grows. So we see these companies benefit a lot from their AI momentum. Meta had losses, Apple only 4%. I also summarized their strategy here. Five strategies, one question. As I mentioned, they have different stories for all the five companies. They use different strategies. The real question isn't who spend the most on AI. It's who converts that spending into earnings and ROI, right? So that's why like Facebook spend the most of amount on AI CapEx expenditure, but actually their stock price went down in 3 months, was negative 11%. Maybe it's to spend too much. So it's not about you spend more, you will have more earnings. It's a tricky question, and also depends on how you use it. um, it's very detail oriented. We need to watch what they're doing, what projects they're doing. Next time they're gonna disclose it in the next earnings announcement. And for Alphabet, I mentioned their strategy is using search with which is the current cash flow, the revenue, very good. Cloud is growing, very good. Gemini, we don't know, but at least they have their competitive power with the Gemini, right? The others don't have any AI tools other than Microsoft. So the question for Alphabet is, can Gemini Cloud AI search generate sufficient returns on rising CapEx? The question is pretty simple. So for investors, if you're users of those tools of Google, you might have some idea and change your investment strategies. For Microsoft, very strong AI monetization. Can that continue to justify infrastructure spending? For Amazon, can AWS AI demand turn infrastructure investment into accelerating earnings? And also, I mentioned Alexa is still in the early stage. Will that benefit from user engagement? I don't know. We don't know. We will watch. Meta, AI engagement advertising. They benefit from what they spend, but is it too much? We don't know. It's a very big question. Based on market reaction, sounds like investors think they spend too much. For Apple, it's still an early stage for Apple. We are looking for, can Apple generate AI-driven growth without joining the infrastructure spending race? They didn't spend a lot of money in AI infrastructure. So what are they going to do? Maybe they're gonna announce something later for their September event. Okay, so this is very important. I mentioned earlier, and a lot of people are discussing about other stocks rather than the big tech, the five big techs. You might talk about microcon, Sandex a lot this year. Some people made a lot of money from those stocks. Some people lost their money from their stocks. So it's super hot about all those like chip makers and memory makers. Here, what happened in July? We know what happened before July. So their stock price elevated a lot, could be 10 times in a year or something. And for Sandex, they even pushed the entire Korean index, right? So it was impressive, massive as well. So what happened in July? At the beginning of July, it keep goes out, elevated. The shareholders of all these companies benefit a lot. However, if you joined later, like here at the peak, you might suffer from what happened in late July. Um, First, the all of those AI stocks went down. It could be people asking me what happened. I don't really have the answer. Nobody really have the answer. But one explaining could be institution already had the profit, right? They just trying to rebalance it, or they need to realize their gain, so they sell something. But the pullback was moderate, was okay, and stayed stable. However, here, all from July 27th to July 30th, something happened. And stock price keep going down, like Microcon and Sandex. I don't really remember, but I think some days they went down by 10%, and they went down continuous 10% for a couple days, and hurt even for Sandex, it hurt the entire Korean stock market index. So a lot of AI investor was panicking during that time. And you see a lot of people are discussing, should I sell it? What's going on? Will the sell off keep going? When it will stop? Where's the button? We see the button near July 29th. What happened? Actually, I will you probably know what happened later. And before I'm talking about that, it's quiz 3 time.
Okay, now let's bring out our final quiz question for all Tigers. This is your last chance to win today, so get ready. And here's the question. So, which company's AI strategy is described as AI to devices to ecosystem? A. Amazon, B. Meta, C. Apple, or D. Alphabet? I can see a lot of you are paying attention, so let's see our answer. And the final answer is C, Apple. So congrats to our final winners. And now moving back to Selina.
Okay, congratulations to the winner. Okay, here's very interesting thing. I didn't tell you what happened. You might already know, some of you already know what happened in late July. And later this event was revealed by many social media. It was exploded news everywhere. That's kind of explained why those fundamentals are doing well, why the people are selling off the very good AI stocks, Sandex and MU. I got a lot of questions. I saw a lot of investors talking about they were so worried, so panicked. Um, and I look at fundamentals. I didn't see any bad news about the fundamentals. The only thing could be whether was overbought like before or like before. Usually you think um, it's hard to predict. The demand of the chip makers are very high, the memory makers are very high, but what is the fair price for those those companies? We don't really know, and maybe it's just we overvalue that and instead of undervalue that companies. That might be the reason. But sounds like they were at the peak for a while. The market is even they're struggling, like debating. There are many market participants that kind of agree with the price near like at the early July. So what happened in late July? This guy, the founder of situational awareness, Leopold, he was the former OpenAI researcher. And actually, a lot of retail investors they think he is a lot of his followers. They like him so much because what he created, founded situational awareness. It's a fund, and for this year, and for the second half of the year, he achieved more than 400% return just for the first half. A lot of people think he is the god of investment or whatever. What he did was large AI positions. It's totally different from most of our tiger investors, right? We always learned trying to diversify our risk, allocate it differently rather than focus on highly correlated stocks. So a lot of people or economists might or teachers, professors might say, oh, you shouldn't, or financial advisors will say, oh, you shouldn't just put all your eggs in one basket. But he did. He put all in AI positions. What happened was AI sell off. I showed earlier in from July 20th. So it affects him a lot because his position is highly leveraged, way leveraged than most of hedge funds position. And once the market went down a lot significantly against him, he got margin calls. And he has to liquidate no matter what price it is. But then he liquid the price. It's like a how to say ripple effect or butterfly effect or snowball effect. When you got liquidation, you sell, you sell, you hurt that stock, then stock is going down. And you still, which the other position will be affected. You have to keep selling no matter what the price is. It just caused a huge chaos in the stock market. You can think a lot of people are thinking. I remember for microcom, it was like above $1,000 in early July, and then later the bottom was $700. Investors think it's very painful. What happened? It's because of mainly one reason could be this. So Citadel purchased situation awareness because hey, they have to stop this chaos. It's hurting the entire market. Probably, definitely, it's oversold. It's under market valuation um, for most of people. And after Citadel purchased the situation awareness entire package, so the tech sector rebound. It's a very interesting story. This story we only got to know, I think, is the late, like probably July 31st, August 1st, and the internet was talking about situational awareness. We didn't know exactly what their strategy is, but we only know it's highly leveraged. And he didn't disclose everything he invested, but we know he definitely invested in those big winners, chip make manufacturer like TSMC, memory suppliers, SanDisk, Microcon, power companies, Bloom Energy, and AI cloud providers, private AI companies, Anthropic. Um, so his investment style is high conviction, concentrated positions, long short portfolio, significant leverage. So he has his own expectations. He thinks some AI companies are benefiting. I mean, the chip makers are those are benefiting from AI investment. So they are the winners. He has leveraged long positions on those stocks. And he also sell the losers, has very high leverage short positions on those stocks. What happened? He also borrowed money to increase the leverage. So that's his strategy. And he did well in the first half of the year. So why, however, in July, it was like a tornado came. Horrible. So why did everything fall apart? First, AI stock fell, right? I mentioned, I showed the charts, and then margin calls forced to selling other investor. When he sold, a lot of investors in the market got panic, and they were questioning what's going on. They thought something happened. They need to sell. So it's oversold. Many people follow them, and it's oversold. So sell off accelerators. That's what happened, falling apart. It was very horrible. It caused a lot of fear in the market. It was triggered by small movements in those AI stocks. The original fall was little. However, because he's highly leveraged, highly concentrated positions, he had a lot of money, right? He had a lot of investment, and then he gained 400% in the first half year, right? So, and then however, all his position got liquidated, and it's just keep going down, going down, and cause a lot of fear, which is not this kind of strategy is really risky. It's not recommended at all. So if people ask me what's going on with those AI stocks, these can mainly explain what's going on. Even the fundamentals were doing very well. Okay, I think I explained most of the contributors in the stock markets for by like related to the single stock performance, their earnings announcement, as well as the situational awareness, which is not fundamental. It's their very risky position caused the pitfall. Okay, but there are another factor. Last time I talked about the SP 500 zero DTE options, the macro events. Macro events are super important. I mentioned how stock price was calculated. Interest rate is very important. Interest rate is the discount rate of stock price. So who decided the interest rate? Fed. And when did they announce it? FOMC meeting. And I repeated myself again. The job reports, CPI reports are very important for the Fed to make decisions on interest rate. So the investors and market always react to those report dates. What we see is this SP 500 index from June 2nd to now. It went up and then went down a lot. But last week it hit the button, recent button, and peaked recently. And I think this week are doing very well. What happened with FOMC meeting? Even they actually announced they held the rate steady. I mentioned before there was rumor Fed is going to increase interest rate, but they didn't on the July FOMC meeting. I asked the question why. It sounds like the stock price should go up, but it's keep going down. I don't know. Sometimes we don't have the answer. That's how market react. Probably the market still think there will be fewer rate cuts, or maybe there's no rate cuts this year. The market is really want. I mean, not expecting the markets need rate cuts because the interest rate so far is really, really high. It's about 4% for a long time, right? Since COVID. Before was 2%. The market want the interest rate go back to 2%, but it will take a while. So that's a concern, keep going down. And the job market I mentioned, is very resilient. So sounds like though no urgency for Fed to cut interest rate, and the SPX keep going down. CPI actually look at that. Sounds it's very correlated. CPI was a good news for the interest rate. The inflation continued cooling, supports easing. So we do see positive growth for stocks, which is positive for growth stocks, right? Interest rate is very important for growth stocks because growth stocks need to borrow money from banks. If the interest rates are low, they borrow money and they invest. Could be AI CapEx expenditure or other expenditures, right? But if the interest rate are very high, they are not going to borrow. So when the inflation, so it sounds like it could be it's possible for Fed to cut the rates from the CPI report. And another thing happened recently. When I'm creating this chart, there's why the stock market rallied this week. Another thing was the Department of Treasury just bought the long-term debt. What does that mean? Sounds like a quantitative easing. So quantitative easing is just like interest rate might be lower in the future. So the stock price did rally this week, doing very well this week. And we're still gonna watch, as I mentioned, there's another FOMC meeting in September. Let's see whether Fed is going to cut interest rate or not. Another market event we should watch is the Jackson Hole Symposium. So Kevin Walsh, the new chair, will present it there. We would like to see like whether his tone will be dovish or hawkish, whether some people trying to predict, right, whether there will be rate cuts or not. Okay, and I think so how are we going to use those informations? If it's dovish or it's a hawkish, if sounds like they are going to cut interest rate, what we are going to expect. So if they are going to cut interest rate, we can think it's good for the growth stock, especially for the tech companies. They should go up. They have beta, right? The high beta. They should go up even more. If not, so it will not be good news for the high tech companies. Yeah, that's how we interpret those macro events data. Here, that's the last slide. I would like to summarize all those information. How are you going to use it for future? I mean, the next month or the rest of year, you need incorporate those into your investment strategies. So for AI earnings, can AI investment continue to drive earnings growth? So let's see how's Q3 earnings report look like. They did spend a lot of money in Q2. So are they going to already translate it into the new growth, are they going to monetize it better? That's one question. And how about inflation and labor? Is the economy cooling without entering recession? Is the economy really doing good? So the Fed is going to cut the interest rate. If they cut interest rate, the stock SP 500 gonna keep going up, or the other way. Um, so the big picture is strong AI plus cooling economy plus easier Fed policy that will be equal to supportive for growth stock. I mentioned here, I just trying to repeat and summarize it. The other picture is sticky inflation, higher for longer, and elevated AI valuations. That will be risk of another valuation reset. So let's watch what will happen, the green side or the red side. Then we will see what will be the outcome. So for high insight takeaway, the AI story remains fundamentally strong. The next question is whether the macro environments allow those fundamentals to translate into higher equity valuation. And thank you very much. If you are interested to find more information, you can find our highinsights.com official website. Also, here is my contact information. And thank you so much for listening.
Okay, thank you, Selina. And we are now moving into our Q&A session. So drop any questions you have in the comment section and Selina will be addressing them live. And now looking at the comments, I saw one during the Meta AI dashboard part. Someone asked if the pullbacks, mainly profit taking and rotation, where did the money go? And which sector do you recommend I follow now? What do you think, Selina?
So first, I cannot provide financial advice, but those are great questions. Is he asking about AI? I can't find, I mean, Meta. I can't find the question. There's so many questions. Is he asking
Yeah,
about
there's a lot.
Meta specifically?
It was asked during the Meta AI like dashboard part, so I think he might be.
For cash, I don't see. So Meta, as I mentioned, I think, after you compare with all these other four big tech companies, they did spend lots of money, more than others, on AI cap expenditure, which compressed their cash flow. Uh, so the debate is like they might spend too much. That's why their stock price went down a lot. So we really, really need to watch how their advertising and the apps are doing in future. I see another question related to Meta earlier was like, is that advertising thing already pricing? A very good question. We don't really know whether pricing or not. Probably pricing a little bit. The thing is, we don't know how many manufacturers are going to post more advertisements on their platforms or apps. Maybe all of them already put it. I don't think so, right? So maybe there's a lot haven't put their advertisement on Meta. Or maybe Meta will change their pricing strategy. Could be because AI make their ads cost lower. They can make the charge the clients lower, but more volume. So depends. So still, there's a lot of potential for them to grow their advertising revenue, and also even they have the how to say the base of the manufacturers who pay for the advertisement will not change, but the frequency might change, right? They might spend, they pay, they only put one ads a month, but later could be a week or something. So we don't know. And also based on the the macro environment as well. If the economy is gonna doing well, the interest in going down, it's benefiting Met, Meta. So will lower their costs because they borrow money, and also will benefit the manufacturers of any products and who pay for advertisement because they also borrow money from banks, right? So, and also for payrolls, if payrolls are getting better, the job market is getting better, the consumers will buy more from Instagram, whatever platforms. So we don't know. So there's still a lot of potential there. Oh, I see a lot. Can I pick questions?
Yeah, sure, go ahead.
Oh, so every tech companies are investing among each other. So where the real money is coming from, will there be an AI bubble? A lot of people talking about AI bubble for a while. So when late July it happened, they thought, oh, is bubble busting or not? Um, and at that moment, I was thinking, oh, I think it's too early. A lot of manufacturers, like chip makers or memory makers, they still haven't fulfilled everything yet. And also, the data centers, power companies, they still haven't finished their contracts yet. Kind of early. So for this stage, I don't think it's about AI bubble. It's about which company are you investing. There will be winner and loser, just like internet in early 2000, right? The internet bubble. There are winners, there are losers. The winners are like Apple, Microsoft, Intel, and IBM, blah, 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 right? Depends on what company you're investing. If you don't know what company is investing, you can always invest in some ETFs. They are more diversified. Don't pick something like situational awareness. They're so concentrated. It's really risky. As retail investors, we usually also want to do risk management, right? We don't want to have highly exposed to one sector are invest among each other. Yeah, their tech company are different. They're software companies. They're hardware making company, like Nvidia, hardware making companies, right? So, like Apple, they have hardware, they have software, but Apple still make purchase. They have manufacturers to make their Apple chips. So they pay money to those companies, like the Taiwan companies, SanDisk, all those are benefiting from those purchase from the big tech company are different. Does being, let me see another one. Just lots. Can Alexa catch up and become a serious AI product, or can it fall too far behind? That's why I put you see the AI investment dashboard I created for the traffic lights. It was just oh, maybe it's too far from here. It was just yellow. So watch. We don't know. It's early stage. Alexa, I don't think Alexa is being improved a lot. Amazon is definitely very good in AI modeling. They have AI infrastructure. They're testing a lot of stuff. There's potential for them to increase the consumer experience with Alexa, as well as Apple's. I can't call the name because I'm using iPhone, as well as Google Assistant as well. It's very competitive. They definitely should do something. Otherwise, the consumers will switch between these three smart home assistants, right? Because more and more people are building their smart homes. Um, Apple business model is outsource and keep the patent tight. Use other people money. Good strategy. Uh, yeah, that's what I mentioned. Apple purchased they asked the manufacturers to make their chips, right? It's kind of outsourcing and keep the patent tight. Use other people's money. And good strategy. It's I don't know whether what do you mean by use other people's money, but anyway, they they have their own patent. They created the chip, right? The CPU, how the CPU look like. They have Apple chips. They don't use Intel or AMD anymore. They have created their own Apple chips, so they have their patent. They also charge premium from of if you are users of their products. Apple products are not very cheap. It's a good strategy. Financially, it's always a good strategy. Their cash flow is always very good. When we were like learning the finance, corporate finance or investment 101 at school, it's always a great example to keep your cash flow very liquid. But the thing is, I mentioned earlier, they are very conservative on spending money on AI investments. We don't know where is their future growth at this moment. Does B, let me see. Um, So if the pullbacks mainly profit taking and rotation, where did the money go? Which sector do I follow now? That's a very good question. I always look at that as well as a retail investor. I'm also a retail investor. So when we were looking, I always when I look at this entire sector, like the AI sector, microcon, Synopsis went down. What happened? Where's money go? Is there rotation? I saw actually Apple was doing well at that moment. Before their earnings announcement, they're doing very well. It could be, hey, and also, however, other SAS company are not doing so well. It could be like the cash flow thing when you want to have secured investment, a lot of and AI stock was riskier during the sell off. Investor or institution will relocate their money to a safer place. Apple is always the place. But later, when they had earnings announcement and they announced that they don't have a lot of AI expenditures, the stock price went down. Then money goes back to some other sectors. And I don't remember who are the other sectors. You always see there's rotation, and the rotation swift is so frequent now. It could be this a couple weeks in this industry, a couple weeks in others industry. It's very volatile. Depends on a lot of news. For example, I would like to share for people coming. There's another very good, very useful news about the AI sector. Since you're so interested about that, uh, as you might remember, Alphabet. I mentioned how they allocate their AI CapEx. The very large one was the 24% on data center. Actually, you see recently this week, the data center stocks are not doing really well. Even the, the situational awareness event was gone. Why is that? So if you read news, you might see a lot of states are having concerns about data center expansion because it uses a lot of utility water, electricity, and those states, people in those states think it will increase the water utility price, which is bad. So the government in some of the states would like to take a pause on data center expansion. So this is like a cycle, AI cycle. I was going to write a paper about that. Once it finished, you can check all my accounts. So, so this taking a pause, the data center was affected, but the memory, I think memory makers like Microcon was okay. SanDisk was okay. The price came back, but the data centers, there are a few Equinix or data centers, other stocks didn't come back. They were definitely like AI infrastructure makers. Their stock price didn't come back to their recent high yet. A lot of policy related stuff. Once I don't know how long that thing will be resolved. I mean, the concern of using too much water and electricity for building data center, it's more about political debates. Whether the government or the state government would like to make it let them continue the construction or speed up or slow down. We need to watch that. What else? What else? What else? Just going. Is there new questions? Oh, are diving now. The Magnificent Seven are diverging now, right? Which held up post earnings and which started to weaken. Yeah, I probably showed you the charts, so you probably got your answer. And also, I didn't show the seven, I showed the five. So Nvidia was not included over there. Nvidia recently are doing quite well. They probably was one of the positions, the situation awareness. found. We don't know exactly what his position was. It was not disclosed, but could be one affected by that event as well. Alphabet stock fell despite strong surge and cloud numbers. So is the market being too harsh or right? Be curious, cautious? Yeah, just like other big tech companies I mentioned here. Their fundamentals are doing really well. Their search engine, good news for their search engine was not deteriorating by deteriorated by AI usage, right? Replacing search usage by AI usage. And also definitely there are a lot of tremendous growth, future growth in cloud, Google Cloud. However, their stock is still mixed results. It's still the same thing is whether they're going to they spend a lot of AI cap expenditure. Is this going to translate into revenue? We don't know. That's a concern we have. So it's kind of cautious. And what else? Oh, there's a lot of questions. Any stock you personally avoid, or sector you think are overvalued? Mm, just I cannot provide financial advice, but just generally, any stock you personally avoid. I always do my investment based on fundamentals. If the fundamentals are looking good, the fundamentals include a lot, like AI cap expenditure, if you are talking about those stocks, whether they have any strategies for future growth, depends on what company are. And I know the SaaS companies are really struggling recently. I saw somebody was talking about Oracle is also the SaaS company, and other SaaS company like Netflix, Salesforce, they're struggling a lot because the AI, they think their AI adoption might affect their future growth. So I don't have answer here. Let's see how AI adoption will affect the company. And but I kind of have confidence those big companies, they have their own strategies to compete with the AI adoption, like Netflix or Oracle or Salesforce. They have been in business for a while. They definitely need to think about how to survive in this new era. Any stock you want to avoid? I feel like it's not any stock you want to avoid. Generally, it's just like if they're been going up a lot, and now it could be already priced in. So it's already pricing. Why would you join the game? Maybe join the party. Maybe it's too late. Just like a lot of people join the party for the AI stocks in like around July 20th, which is the peak of all those AI stock. They're still in loss position. This is like an example. Don't always just follow people, chase, chase, chase. You think there's a lot of momentum, but they are those stocks already went up 10 times. It's very hard for those stocks to keep going another 10 times in this year. I'm not saying they're not doing bad. Actually, they're doing well, but we shouldn't join when they're at the peak, right? So overvalued. It's always hard to say what is overvalued. Some people use EPS, earnings per share, to say when it's too high, it's overvalued. But it depends because if their strategy is really good, really successful, definitely they could be have a lot of growth in the next a couple years. So even the earnings per share, even the I would like to earnings per share is okay. A lot of people use market to book, right? The market book might be too high, because they might have very good future growth from some of the strategies. We don't know. Overvalued, just don't chase other people. If there is when the stock going up a lot, I think recently it's Moderna. Moderna's went up a lot in a day because they have one invention, medication approved. Actually was phase three. Phase three was not final phase. I'm not an expert. I didn't pay attention to that, but I know Moderna was very hot even on Tiger's platform. People are talking about that. I just don't chase when it went up so high, and it could be overbought. right? So overvalued for the short period. And when you enter the market, it might take a very, very long time to get back. If you had to pick one stock from the five for the next 12 months, which one? One stock from the five. Depends on your strategy. Um, they're all very different. And I don't recommend you pick one and I don't make advice. But if you want something, their correlation of the market, you can just buy some ETF. They actually SP 500 already reflected by those big techs, because their market share is really, really big. So you can just buy ETF and benefit from any of those. You don't need to just buy one, or you can just buy a little bit of everything. If you pick what stuff from, oh, that you already answered that question. Oh, you asked that question, kind of. Oh, this kind of forced deleveraging happen again with another AI focused fund right now, or I don't know, maybe I just did a study about situational awareness. There may be another one. I didn't study that, but just be careful with that. And I think the market are kind of playing a lot of SEC also paying a lot of attention to this kind of fund as well. What else? Is there any other questions?
I think you've answered most of them, and due to time restrictions, I think we have
Mm-hmm.
to start wrapping this live up now. So,
Mm-hmm.
again, thank you so much, Selina, for sharing your time and expertise with us today. That was fantastic, and I'm sure our audience has a much clearer picture of how earnings, Fed policy, and big tech's AI CapEx are shaping the market and how to navigate these moves moving forward. And now, as we wrap up today's session, a big thank you once again for sharing such valuable insights. And for those of you who would like to stay updated with Selina's market analysis, you can see here in the next slide, you can follow Selina Han's insight on To the Moon at tothemoon.com and explore her full research reports at www.haninsights.com. And also, if you have any unanswered questions in this session, you can also leave a comment at her Tiger Brokers app account. So today we've covered everything from macro trends and the Fed's outlook to how big tech's AI capex and earnings are really moving the market. So thank you everyone for joining us today. We hope you found the session insightful. If you found value from this session, don't forget to follow Tiger Broker Singapore for more expert sessions like this. And if you want a recap of today's live stream, you can always search for a recap video in the Tiger Trade app. We look forward to seeing you in the next one. Take care and happy investing. Thank you.
Bye bye. Thank you.